markets, not just the equity markets, Indian bond yields and the currencies are also buoyant with the NDA leading the charts right now. Joining us now on this segment are Radhika Rao of DBS Bank and Nagaraj Kulkarni of Standard Chartered Bank. He'll be joining us shortly in just a few moments. Radhika, I want to start off with you. Obviously, we have been seeing the Indian currency, that is the Indian rupee, seeing some strength right from the month of February this year. Now that we're approaching more clarity with regards to who comes into power by the end of today, what's your sense as to what happens to the currency? Because as per earlier market commentary, the right value for the currency as per read was somewhere closer to 72 to the dollar, and we're already at 69.5.
Hi, good afternoon. I think the highlight of the day is, of course, the election. So, one that the election outcome is as close to, even better than exit polls have suggested. It's certainly an encouraging development. And I think, like you rightly mentioned, you can see it across the markets, especially in equity markets hitting record highs. And then you've got the rupee as well, which is still extending the rally that got started somewhere in the early part of the week. Absolutely, since February, I think the political uncertainty is one factor that was affecting the rupee as well, apart from what's happening globally. So at the start of the year, we saw worries that it's going to be closer to an hung parliament, and thereafter March onwards, there was a clarity that probably the incumbent might come back, but probably not enough to muster a majority. And exit polls were probably the first sign where it was clear that the ball is still on in the incumbent government's court. So in the short term, I think the rupee continues to enjoy the relief rally, particularly because you've got domestic investors as well as foreign investors seemingly looking to come back. But I think longer out, we would still be a bit concerned in the sense that we don't expect the rupee to be able to extend its rally too much. Primarily, I think there are two factors that would hinder such a move. Firstly, domestically, we've seen the tendency for the central bank to prop up reserves as and when there is a flow-driven rally in the currency. So that would give a natural support to the dollar-rupee levels. And globally, things are pretty much quite uncertain. You've got the US-China trade dispute that's going on in oil. I mean, oil is very important for us, and that at 72, 73 kind of levels is certainly a worry for the currency. So looking for beyond the short term where we expect a relief rally, we do expect the dollar rupee to return to 70 plus kind of levels and head towards 71 towards the end of the year. But I need to draw two differentiations. So last year's depreciation of the currency was largely driven by the Fed and the rate hiking cycle. This year's more the growth differentials.
All right, Radhika, just to get your view, you're saying about 71 is the level where you see the currency moving towards. But just the fact that once you get more clarity, a stable government comes into play. We've seen historically that a lot of FIIs start pumping in more money and the floodgates open up in terms of liquidity. And that primarily drives the interest in the currency as well, which takes it and strengthens it further. In light of that, while obviously the other global factors are a constant threat, just the fact that more liquidity will start coming into the market, will that help support the currency?
Certainly. I mean, I think political, today's results actually checks a big box for political stability. So, and certainly that is very important for domestic as well as foreign companies, in terms of portfolio flows as well as real money to come back into the economy. So I think that's completely true, and I agree with you. I think the global piece is still very important for how currency and rates move in general. So to that extent, I think our core view that the dollar will continue to stay supported this year, and that the oil as well as the trade dispute, which is far from clear right now, are the main reasons why we could see dollar rupee inch up from where it is at these levels. But we need to also recall that unlike last year's underperformance, even if we calculate this kind of a depreciation in the dollar rupee, it would be rather depreciation in the rupee, it would be very mild and more to do with how our economy is in terms of the deficits and inflation differentials, not so much because of a huge sell-off. Instead, in fact, this year's underperformers have been the won and the Taiwan dollar in the last one month or so, since this trade dispute has taken a turn for the negative. So from the trade dispute part, I think in the short term we are India is actually protected, but I think global catalysts on a whole might see foreign investors come in slower quantum and probably be much more cautious, and that's the reason why we think that the rupee might end up the year weaker than where it is at this point of time.
Okay, Radhika, stay on with us. Let's also bring in our next guest. Nagraj Kulkarni of Standard Chartered Bank is joining us now on the show. Hi, Nagraj. Thanks a lot for joining us today on Bloomberg Quinn. In all likelihood, India will be getting a stable government, and we've seen some bit of strength coming back into the currency market, at least in the month of February. Rupee is sub 70 levels, and even the bond yields, the 10-year bond yields, which were hovering around 7.45, have cooled off to levels of about 7.2. From here on, I'm sure the global factors will also come into play, like Radhika was mentioning. But what is your overall assessment? Since the Indian currency was outperforming the emerging market currencies, do you see this outperformance continuing?
I think this election outcome, as Radhika mentioned, ticks a big box. I mean, there's always risk premium associated with such big political events, and especially this time around, there was a lot of uncertainty around who will form the next government. And so far, if you look at the sort of outcome, it's clearly favorable for markets. Looks like the outcome is much better than what markets had expected. Now, barring this election euphoria, clearly this is a medium-term positive, but barring this, if you look at what are the sort of follow-up drivers of the markets, then fiscal policy, monetary policy, what is happening to the terms of trade, what is happening to the global risk sentiment, looks like the potential for further INR gains is clearly limited. I do expect some inflows after this election outcome, but to translate that into INR gains will take some time, because our sort of current account deficit has been widening. The trade deficit was wider than expected. So the drivers of the currency market are sort of still not fallen in place in favor of INR. And obviously, if we look back, RBI has net lost reserves over the last 1 year period. So I think there is a lot of other things have to fall in place for INR gains.
Nagraj, there's been liquidity concerns in the system right from the time IL&FS issue began in September 2018. What measures now going ahead do you expect from the central bank and also from the central government to ease these liquidity deficit issues?
Yeah, I think this has been one of the on the top of the mind of all the authorities. I think RBI has done several measures, the FX swap auctions, they have done OMO purchases to inject liquidity, and they've been pretty sort of on the ball as far as liquidity is concerned. And there have been statements about a couple of weeks back that after the elections, the RBI will continue to sort of do FX swap auctions and then inject liquidity. So clearly expectations are that there will be liquidity support, and next 2 to 3 months, the currency circulation expansion also sorts of comes down, and it helps the banking system liquidity. So market is some sort of expecting liquidity injection measures like more OMOs, FX swap auction, and some sort of a commitment from the central bank that liquidity will be moved to neutral or even to surplus mode. So that is clearly there. And then RBI is very well sort of on the ball on this one. So expectations are pretty strong on the liquidity move.
All right, we'll leave it at that. Nagraj and Radhika, both of you, thanks very much for your quick comments on what's been happening in the currency as well as the bond markets. For the markets, they've come off significantly from the record highs. We've got the Nifty now up just about 0.5% and the Sensex also from being up 2.5% in intraday trade. So the last hour and a half of trade is going to be an interesting one. We're going to take a short break right here. But up next, we have a dealing room check and a very important prominent market voice, Ramdev Agarwal, will be joining us in. Neeraj Shah is in discussion with him.
As the vote count